Welcome to our first event of the year. We're going to have 6 more events during the course of the year, and I hope to see you all at all of the events. Today we're starting with real estate. We're going to be moving to blockchain, private equity, fintech, healthcare, oil and gas, renewable energies, etc. Why the hell are we doing all of this? Let me tell you a bit about the council, the Financial Policy Council. We are unlike any nonprofit organization out there, and I'll tell you why. I don't say things lightly. Most of the organizations out there are staffed with academics, professors who pontificate and who know shit about business life. This is not who we are. Within the organization, we have experts in every single asset class. The intent is to empower people, inspire them, and teach them how to make fuck you money. That's it. We are rabid capitalists. There's not one socialist on board. There's not one liberal on board. I don't want to have a tempered discussion. We are hawks. We're here to push the agenda of capitalism and regain back our country that's been hijacked by idiots, morons, and liberals. That's who we are. I don't want to hear any more people playing victims, as I see on social media. Oh, you know, I lost this, I lost that. Stop playing victims. Wake the fuck up, take a stand, join our group, and make a difference. Talk is cheap. We want to see a commitment. We're all committed. We've been in business for 12 years. We have 300,000 followers on social media. So this is not like we started yesterday. We sponsored so far over 70 corporate events. We have around 80 corporate sponsors, not one sponsor, because we cannot be bought and sold, and we will not be bought and sold. We have 80 corporate sponsors for a reason, so we diffuse the power between 80 of them who support our activities. This is a revolution, and it starts with the pen. It starts with the education. It starts with the empowerment. I'm not afraid of cancel culture. Bring them on. I will destroy them. And this is how each one of us should have this attitude if you want to make fuck you money and win back this country. And you can always be an observer and a victim. You know, there are 2 types of players in this world. There are the players and the observers. You want to play a player or an observer? If you want to be observer, you can just leave this room right now. We don't need you. We need players who are committed, who love this country, who are capitalist, who are looking for freedom, for prosperity, etc. I guess you get the point. I'm not going to elaborate more on that, who we are, what we stand for. And I'm saying this to all the newcomers here who never attended any one of our events. And I'm very voiceful on social media, everywhere. You can follow me, you can see what I say, and the Financial Policy Council, and all what we do. Enough being silent and being nice about it. At the end of the day, if you really want to be successful, believe me, I've been through that, you have to become dangerous. If you're not dangerous, and where people are afraid of messing with you, you're never going to be successful. They will crush you like a cockroach. This is how power is displayed in America, and this is how you acquire power, influence, and money. Let's be blunt about it. There's no need to, tiptoe about it. No conservative organization will say this. No nonprofit organization will dare saying that, because it defies the narrative, it contradicts the narrative. Well, it's time to wake the fuck up and start saying it. We're not stealing, cheating from anyone. We are saying what we believe in. And if you don't have principles in life, you are nothing but dust in the wind. And I really hope this resonates with all of you to show you how serious we are and how committed we are. We have skin in the game, we have track record, we have outreach, and we are good, patriotic people. Having said that, today our first event is about real estate. Why? Because it's a very important asset class. And at the end of the day, we talk and empower, educate people about every asset class out there. You really have to understand what you're doing, and this only comes from experts. At another nonprofit, you will see a bunch of professors from this liberal piece of shit college called Harvard Business School who will come and pontificate for you what to do. They know shit. They've never been in business. They never made any money other than the salaried employees at Harvard. This is different. We bring in only experts with skin in the game, entrepreneurs who made it or who didn't make it, because you only learn from your failures, not from your successes. To share with you their experience, what they learned, how you make money, how you create wealth. Why are we doing this? To come back a bit to RFPC, and we will delve very much into that. But this is important to understand the foundation of what we're doing. The best revenge is success. What we want to create is an army of millionaires and billionaires, opinionated, with big balls and a lot of guts, who say this. This is how you become dangerous. This is when people listen to you. Not when you tiptoe about every word you're going to say because you're going to hurt some idiot's feeling. So let's go back to real estate. Real estate, as you know, doesn't make any sense anymore for any investor today. You have high interest rates, high asking prices, the government is limiting regulation on investors. It doesn't make any sense anymore. So we brought in here 4 experts who will share with you their background, and then we can delve into that. The way we start, I ask a couple of questions to each one of the panelists, and then I'll leave it up to you, the audience, to ask them the questions you want. This is a very interactive discussion. This is not like a bunch of guys who come and pontificate and professors, this is what I think, this is what I said. No, I'm going to grill them, you're going to grill them, and this is how we're going to learn from the process. Don't give me your comments, what you think. We have to know what they think. Grill them as much as you want, ask them the tough questions, and there is no stupid questions. Like some people, there's no stupid question. There's no cancellation, there's no censorship. You can ask whatever you want. Because we're here to learn. To learn. And I want you to get out of this room, when this is over, and say, wow, I really learned something today. It's not the sanitized discussion. I don't want sanitized. I hate sanitized. Say it like it is. So let me introduce the 4 panelists right here. I will start with each one of them giving you for a couple of minutes background on who they are, and then I will start asking them the questions for maybe half an hour, 45 minutes. Then I'll leave it up to you to ask them the questions you want. You can ask one panelist or all of them. Okay? I'll start with Pietro Savvides. I'm sorry, before I start this with Pietro, I forgot this. I would like to thank the sponsors for this event, Pietro Savvides and Joshua, who sponsored this event, and a big applause for them. I would also like to thank the support of all our board members and Project Liberty team members within FPC. Not all of them are here, but I'd like them to stand up, please, for a standing ovation. So I'll start with Pietro Savvides. Pietro, please, if you could go a bit over your background, why you're here, and then we can go, or the rest of the panelists, then go to the questioners. Thank you, Pietro.
Hi, guys. For the
Go
word?
ahead.
Yeah. So I'd like to commend you guys for being here. You know, business is all about people. It's a people business. And if you want to go further in life and you want to advance, you need to show up. If you're not going to show up, you're not going to do it on the web, on the internet, on Zoom. It's not going to happen. Even though we were forced to stay home for a while to do business that way, but business doesn't happen that way. And now they're paying the price for it. That's why you have half of Manhattan empty, the buildings and the office buildings and the banks are crazy. But they started it, right? So they started that trend, and I commend you. I want to also say to the YouTube people who are going to be watching to subscribe and like, of course, Ziad. I started my career in construction. I escalated slowly. I started to dab into the real estate field as I was doing the construction. My workers had a lag time, so I needed to keep them busy, and I started to dab into the single family houses, and I started to build them and repair them, and slowly that was, you know, it started to become easy for me, and I started to escalate and get into the duplexes and triplexes. And then I met an investor that believed in me, who was actually a client of mine, and gave me the opportunity to get into the multi-unit business, and that's when my life changed. I didn't know it at the time, though. And as I started to do the multi-unit business and grew my portfolio from one building to the next building to the other, I started to build a sizable portfolio. But I also learned the concept of leverage and how to leverage property. Once you've stabilized it, repositioned it, you pull out your cash and you go to the next one. And that feature on its own is what took me to the next level. Not that I realized it in the beginning. I didn't know. I was just a hard worker, put my head down, and I was doing what I had to do. But eventually it came to a point in time in my life where all the assets that I had in real estate supported my lifestyle. So I didn't need to work anymore for clients as a contractor. And that was a pivot for my life and my family, of course, because we realized that, look, I don't have to work. I became free. In that moment in time, I became free. I didn't have to get up in the morning for a job. And what do you do at this point, right? What do you do? And that's why I'm leading to this is you're free, right? You're free and you have time on your hands and you want to grow and expand in a different way and have legacy. And this is where the mindset comes in play and you start to think differently. And the reason why I'm here and I met Ziad, right? Because I'm at a point in my life where I want to do fuck you money. And I want to expand and grow my legacy. And that's why I'm here.
Thank you very much, Pietro. I move to Josh Gattuso. Josh, please go ahead. A few minutes.
Little background about myself. I'm very similar to Pietro. I started in construction when I was younger, paid my way through college working construction. As I was doing that, we started our own little construction firm, began flipping houses, making that money, and then building more and more. As I was getting my finance degree, people were coming to us saying, hey, wait a second, you guys want to partner with us, do this? And the inexperience, and I was like, I don't want to jump in and start putting money into something where I don't trust these people, but why don't we finance you guys? Why don't we back you? And that way I can control the funds to ensure that you guys are finishing the project and it's done correctly. Plus, we're making a cut on that. And then once that is done, then obviously they were flipping the properties. Once my degree was finished, I moved on and kept saying, wait a second, I can have less risk if I'm just financing these properties and backing the money instead of going out doing it myself, putting my money in. At that point, as our finance company grew, we started doing more and more, and then jumped over into the commercial realm. And that's when we started the commercial brokerage firm. And at that point, we had enough money where now we are investing in commercial properties ourselves, and our firm grew where we're developing not huge projects, but in the $1 to $3 million range, and then financing 10 to 15, $20 million projects, building from there. And like I said, alleviating the risk by us being on the finance side, and then building up enough capital when we jumped into project. We knew that if something went wrong, and trust me, in construction, and it always goes wrong. Something always goes wrong. And if you're going into a project thinking it's not, well, you're screwed, because it's going to go wrong. Just a matter of how wrong it goes and how fun you are, and you can overcome that. Stuck here, we want to get to the next level, and then to the next level upon that. And that's what I'm here with all these intelligent gentlemen, to help you guys and spread the knowledge and wealth that we want to create for everyone.
Thank you, Josh. Very appreciated. Moving to Peter Siegel.
Thought Pauli would go before me. Sorry about that, Pauli.
You're good, buddy.
Well, thank you, everybody, for coming. It's nice to see a lot of familiar faces and friends and new people. It's really great to get a group of like-minded people together. I started my career in multifamily I'm 56, so it would be 34 years ago. At that time, I didn't have any Wall Street background. I didn't have corporate employment on my resume. I was unemployable. ADD was a real thing for me. I couldn't sit still. No one would hire me. I was a shitty employee. I couldn't work for anybody because I had the heebie-jeebies. I couldn't get anything done. So I really got into real estate as a matter of necessity and survival. And I had to buy what I could afford, which was the shittiest neighborhoods and the shittiest places. So I started in Trenton, New Jersey, and back then in the South Bronx and parts of Brooklyn, parts of northern Manhattan. And Shimon's here tonight, who was part of the team that sold me all those buildings. I don't know if I want to thank him.
He had those buildings still.
Yeah. Well, the way New York is, I don't know if I want to thank him or curse him, because it's very tough to do business in New York right now, but that's a separate story. But listen, it wasn't the Plaza District in Manhattan. It was these rough areas. I got shot at. I got chased with knives and machetes. I got beaten up because I didn't have a management company back then. It was me and my 3 cell phones. And when the leaky toilet happened, I got that phone call. And it would be a miracle if I survived after leaving there, because of I'm a white Jewish male showing up in a neighborhood where I had no business in being. We'll call it what it is. But I really had to stick to it out of necessity. And I'm grateful that I did. It taught me a lot in business and in life. And fast forward now, 34 years later. So we have about 2,200 units under management. About 300,000 square feet of commercial space. I invest in multiple industries, not just real estate, and in multiple positions in the capital stack. What's happening in the markets right now, real estate equity for the past 15 years used to be the place to be. That's where you wanted to be in the capital stack, being the equity holder of real estate. Now, that's under pressure, so there's other opportunities coming up. The preferred equity is where we want to be right now in the capital stack, or maybe a secured piece of mezzanine debt, if you're lucky enough to find those opportunities. We're looking for new markets because New York, the Northeast, New York, MSA, New Jersey, I mean, guys, it's impossible to do business, so we want to find places that are open for business, that welcome us, that want to have improved housing quality in their communities and revitalize housing stock. And you know, we say property owners, we say landlords, I say housing providers, because the product that we provide to the market is housing. There's a cost to that. The market lately is very receptive and pays for it, which is great. So we're looking for those states and towns and counties that are open for business for housing providers. It's not New York City for me right now, and New Jersey's becoming increasingly tough as well. So I've been spending the past year and a half to 5 years of my life diversifying out. We're now in Texas. We're looking to get into some more of the southern states and find little pockets. We don't have to go in and acquire thousands and thousands of units immediately. I am an advocate for slow growth and for organic inside-out growth so that you can leverage economies of scale and human resources and people and have a decent amount of assets in one geographic location. And that's how I spend my time, and I'm here to talk about it with you guys tonight.
Thank you, Peter. Appreciate it. Last but not least, Pauli Kazanofski. Go ahead, Pauli.
Hi, guys. You know what? Just like all of us just said, really, truly, this is a good-looking crowd because you guys are dressed nice. And you know, a lot of people underestimate that, but in this business, first impression is very important in real estate. I'm actually not like a lot of you folks and some of the guys on here. I'm actually a kid that grew up with a single mom in a bad neighborhood. I was kind of what you would call a street kid. So to say I was unemployable, I could honestly say I was unemployable. And one of the biggest reasons is I'm dyslexic. I'm not some smart guy. I didn't go to some Ivy League school. I'm what they call the meat and potatoes guy rolled up his sleeve. And I actually started in the single family. And I did a syndication for my first multifamily. And I realized right there and then, it's not a bad way to go. You can make money doing multifamily with the syndication, but you're gonna have a lot of bosses kind of thing. You know, you're getting people's money, they're gonna tell you what to do. So I actually went to the single family, and I've actually flipped and documented 706 flips. I develop land, we buy land and we build. I am too a contractor like Pietro, and I started around in that space, right? So single family homes, I live in Nashville, Tennessee, but I'm originally from Montreal, right in the city, the inner city, place called Point St. Charles. And not being unemployable, I knew right there and then I'm gonna have to do something on my own. And I was kind of like an entrepreneur kid since I was a little 8-year-old. Wishing it would snow so I could shovel people's paths and get money for it, right? So there's gonna be people in this room that can relate to each and every one of us. We all come from a different walk of life, but it all brought us here. We're all here for the same reason. And like Ziad said, we want that real high level. Now, I would say we're high level, but being an entrepreneur, you never stop. And we owe it to the society out there. We owe it to ourselves. We owe it to our families. If you're blessed to be able to make money in real estate or whatever, finance or anything you guys do, you owe it to yourself to go out there and do it. Whether you go buy a bigger house or more cars or whatever, or do charity work, when you have this kind of fire in you and you're willing to come on a Thursday night and listen to 4 good-looking guys up here, the bottom line is this, is that shows your mentality. That shows your mentality. That was my mentality. And I learned. I had an uncle that did this. I re-met him through my father's side. I saw he was an immigrant. I'm a son of an immigrant, like I said. And so I just took notes, worked for him for free. And like I said, here I am today, and you know, we get to share our knowledge. And believe me, there's a lot of ups and downs in this business. It's not what they show you on HGTV or any of these shows. It's a grind. I have a lot of students around the country, around the world actually, and I've taught them how to do this business, and it's not easy. But able to do it. And because if you want something in your life, you're going to be able to do anything. So, you know, we're here to really share everything we've done and the ups and downs. And there's going to be some downs, but guess what? That's where you learn. Ziad said it, and I agree. I learned in my failures. That's where I really got my education, in the failures.
Thank you, Pauli. Thank you, Pauli. Greatly appreciate. Okay, look, I have a lot of questions, and I'm sure the audience have a lot of questions too. I would like to start with a question that nobody expects, the element of surprise, and see how you respond. This is practical stuff. It's not theory, numbers, I did this, I did that. If each one of you is today handed from a family office $100 million, what would you do? Given your expertise in real estate, your failings, your experience, your success, what would you do with $100 million cash? Tony,
I got a deal right now. I'm going to put it in. Well, because obviously I'm in multifamily now, that's where I do a lot of my 7-figure paychecks that you hear about. But like I said, I started with single family. I wouldn't take 100 million. You don't take 100 million in single family. What I would do is
hold on. It doesn't have to be single family.
No.
I said allocation.
Yeah.
What would you do with 100 million?
I would definitely look for maybe 500 units. You know, it could be a cluster in the South, red states. I buy in red. Yeah. I live in the South.
Yeah.
I work in the South. I do deals in Florida. I do deals in obviously Tennessee. I do stuff in Texas. I do
Okay,
in the
so
red states.
let's be specific. $100 million in 5 where? In locations where exactly?
I would look in Tennessee, look in Florida. I'd look even in Georgia, even though it's a blue state, there's a lot of red pockets in there, and I would look.
What kind of properties?
At least 250 and over units.
How much would you leverage that?
I would put as little as I can down, like about 25%. That's what banks usually do, and then I would leverage. I don't believe in bad debt. I don't believe in using credit cards, buying cars, and all this stuff and fancy stuff. I believe in good debt, and what I mean by that is leveraging from a bank money, but you have to have skin in the game, and they always require some skin in the game. And now banks are pulling back a little bit. I'm feeling that more often. So now we're even getting hit with 30, and I even had somebody want 35% because it was a big value add. And what a value add is, I'm sure a lot of you folks would know, but I look for value add. And even if you gave me 100,000, I'm 100 million, sorry, I would still look for value add because I want to make my money when I buy. So I'm always looking value add. Why? Because we come from the background of construction. We know construction. We have crews that only work for us.
We're not talking about track record. Let's focus on the question. We're talking about what would you do. I understand and I respect.
I would look for multifamily value add. I would leverage. I would take 100 million and I'd split it up and look for at least 500, 600 units that need value add, and then I would grow that portfolio from there.
Okay, thank you. I would like to move to Peter with that. Same question.
So for $100 million, I'd take 60 of it. I'd buy multifamily value add in red state. So I agree with my friend Pauli. I'd take 25 of it. I'd make private equity investments in a few different industries right now. We can debate the private equity space because it's obviously a higher risk endeavor, but the returns are going to be better. But I'm really banking on my multifamily to provide stable, low to mid-teen returns if it's value add in the right markets. And I'd keep the rest as dry firepower and wait for distressed opportunities because I believe there's going to be a lot coming up over the next 5 years.
Thank you, Peter.
That's good. That's
Pietro?
right. That's true too.
Thank you.
100 million. You know, if you go to Miami, 100 million is peanuts. You can build probably one high-rise, maybe 10 homes, right, Karina? In fact, we were talking with Paul. I was talking with Pauli actually a couple of days ago. We were talking about a development. We were talking more in the numbers of 40 million. Maybe I take 40 million and we'd start a new development, a completely new development.
Where? Location.
We would do it in Tennessee. We were talking about Florida maybe. Texas is okay, but we weren't too sure yet. I am doing some development in Texas. It's very slow now. Even though the affordable housing, there's a lot of demand. I do Montreal. There's a lot of suburbs that the demand is there for under 400,000. So you can do huge developments with that. Like I said, 100 million, you can do a one high-rise. Value add in the multi-unit business. So I would break it down. I wouldn't just put one and bet on one horse. I would kind of spread it out, because you never know. Because when you're doing development, there's a lot of time involved. So you start today and then you end up in 2 years. You don't know what can happen. And now the economy, the way it's so fucked up, is that the unexpected is gonna appear, right? They're talking about low interest rates in June, which I doubt. I don't think that's going to happen. Why? When did they ever say something and they did it? To make us rich? Why would they do it,
Election year,
right?
though.
Exactly. So it's just a carrot for us. They look at us as sheep, and they're just dragging it so that we don't rebel and revolt and cause chaos, right?
Thank you, Pietro. Absolutely. Thank
There
you.
you go.
Josh.
And then I go to Florida and look to develop rental communities of single-family homes in middle-class areas where they can't afford to purchase a home, say, $400,000 to $500,000, but they can afford to rent that same home in the community for $2,500 a month. Hold that, develop a portfolio like that, and hold it 5-7 years, then dump that whole portfolio to investor, to Wall Street.
You diversify it. I'm not looking to put it in one value add. I want to diversify it because some will move quicker. You'll have construction moving quicker. You still want cash flow. I still want cash flow. I'm not buying something that's boarded up and no one's living there, and it's a horrible neighborhood. I'm looking for emerging cities, like smaller pockets in those red states too. So that's in key to really put, and
Well,
I think
that's very
we're
helpful.
all saying the same thing
That's very
here.
helpful. It shows us your different perspectives on the market and how would you actually allocate this capital. Thank you. I'd like to ask a question to each one of you, starting with Pietro. Pietro, what does it take to overcome the challenge of past property values versus today's market prices?
That's a very important question, especially for the seasoned investors, the ones who, like us, who actually have, and there's a lot of you guys here too, who have acquired real estate, have been involved in it. And I'm talking about real estate that you keep and that you've generated income, and you're generating income today. So what happens is, it's called the perception of value. The entrepreneur who's actually taking care of this real estate bought it at a certain price, but as they're repositioning and stabilizing this property, and they're doing it, and once they stabilize it, they say, you know what, I want to do it again and copy it. But some time has passed. If it's a multi-unit of 100 units, 200, 5,000, whatever it is, time has lapsed. But the market has evolved, has moved, inflation has gone up. So now you're looking at real estate, and that perception of value is not the real value. So you're always working backwards. So you need to remind yourself, that the market has changed, and that prices, what you used to pay a contractor, has escalated now. What you paid for a brick, a piece of land, land appreciates in value. So you need to understand, what does it cost per square foot on a piece of land? How much does it cost per square foot? How to build construction? You need to understand those because salaries go up. Everything moves at the same time. And the problem the entrepreneur has is he lags because he's set in his past. So you need to evolve that. So you need to have that trigger where you're triggering your mind and saying, wait a minute, it was yesterday, but now I need to understand the prices. Don't think it's over. You always gotta know your numbers, the analytics. You have to understand the square foot price. Everything's so important.
Thank you, Pietro. Very clear. Josh, question. For success, from what I understand from you, you got to clearly have the right finance guy that adapts to new market conditions. How do you assist investors achieve their goals?
That's a great question. And what I tell all my investors is that each investor they're specific to them. I don't care who you talk to. You may talk to your neighbor. Remember, everyone lies. Everyone's going to tell you, hey, listen, yeah, I got 4%. I just did a deal like that. Well, they're not going to tell you they really got 7%. And they're going to say, oh, it was simple and easy. That's not true. Everyone's deal is specific to them, their financial situation. Your financial situation is never going to look exactly like the person who just did the same deal. So you have to tailor, you have to find out what that client is looking for. What asset class do you want to look at? How much money do you want to put into it? Are you looking to rehab? Do you want turnkey properties? What you're going to do is once you meet that and you determine what their goals are, and of course looking at their current financial situation, then you devise a plan to fit them. You can't, if you go in to try to paint everything with a broad stroke, you're not only doing your client a disservice, you're doing yourself a disservice. And my time's worth money. I would assume all my clients' time's worth money, and I'm not wasting any of it. And that's what you're going to be doing by not listening. So it's more just tailoring to your client and listening to them. And of course, if they got pie in the sky dreams, tell them, listen, you're full of shit. That's not going to work. And a lot of times my clients appreciate that because they'll sit there and they'll try to keep plugging away at something that's never going to happen because other people have lied to them and said, oh, no, you can do it that way. It definitely, whoever told you that's wrong. Listen, no, I'm very confident in what I'm telling you. And why would you listen to someone that doesn't do this for a living? Why would you just you don't go to your barber to get your engine fixed? I mean, so you listen to the people that you want to work with and listen to their plan. And once, like I said, you devise that, then moving forward is much simpler. And when it comes to lending and financing, it's simplicity. I always preach that to my borrowers. When you can simplify things and not try to expand them and go ballistic, that's when the deals go smoothly. They meet the time schedules, and you don't have wasted money and or wasted time.
Brilliant. Thank you, Josh. Really, thank you. Peter, how do you avoid competing with the multitude of private equity funds in your business? Is it by investing in a certain price point, cash flow, market value?
Yeah, all the private equity funds and the hedge funds have tons of capital to deploy. They want to write checks, $100 million, $150 million, $200 million, $80 million. We can't compete with them. Not because we don't have the money or access to the money, we can't compete with them because there's just too many of them. That space is way too crowded. So I built my career and I've been able to compete and carve out a niche in the $5 to $50 million transaction size, which requires, which requires a check of $2.5 million to $20 million. Smaller checks, smaller transaction sizes. I'm competing in a smaller transaction size where the private equity and the hedge funds aren't in that space. Now I have more mom and pop and entrepreneurial type guys, but I can outcompete them. So I focused on a smaller transaction size to carve out a niche, Ziad.
Thank you, Peter. Thank you. Hey, Pauli. Pauli, what do you do when the real estate market is so unpredictable as it is today? I mean, what are the steps to buying right and finding real solid real estate deals?
You know, that's a great question. And right now it's so topsy-turvy right now. It's so unpredictable.
Yeah, exactly.
You hear things on the internet, you hear things on the news, and The world's coming to an end.
Yes.
Well, in 2008, it was coming to the end, but I flipped 62 houses somehow. I don't know how I did it, but I did. What I always do is I go back to what I know, and I go back to value add, because there's people that doesn't have the skills that we have. I understand my craft. I learned it through the grind. And so what I do is I usually will go to a sub-market. If you're trying to compete with everybody and some new investors putting in offers, trying to find deals, they're overpaying for things. I like to go where no one's playing, and then I go and look for a value add. Whether it's multifamily, whether it's a piece of land that I could take, and let's say it's 10 acres, but I could subdivide that, partition that off, and still develop a piece by selling this off and having free money and developing mine for free by using that money. And the value add is understanding construction. Obviously, we all came from that background, and you have to understand that to get the deals today, believe it or not. Or if you don't understand that, get with someone that understands the construction side, and you have to have vision. More now than ever, you have to have vision. And you know, Ziad, you know, in school, they don't teach you vision. Like I said, I was dyslexic. They told me I was like a good kid, I was a good athlete, all that stuff. I had a lot of personality, but I didn't learn like the schools taught all the other kids. And so you have to adapt. And that's what I'm doing in this market right now. We're adapting. We're going to Paducah, Kentucky, Florence, Kentucky, where not everybody's there. And it doesn't matter what state you live in, even in the blue states that are a lot harder to work with, if you go a little bit outskirts, you have to sometimes go where the money is. And that's where we do. We find the value add there, we set up shop, I get my project managers, my guys, and you have to have the guys that are willing to do what you're willing to do. And what I mean by that is a lot of my guys will sleep in a house or sleep in an apartment building on air mattresses. Doesn't sound sexy. It doesn't sound sexy, but these guys just want work. And work is drying up out there. And it's our duty as entrepreneurs to go get them work. And because they helped us get to where we are also by working hard for us. So I'll go into submerging and I'll find the deals, and then I create my own market. I went into Paducah, Kentucky in June. I bought a old motel, turned that into a 38 unit. I bought a kind of like a mixed use building. I turned that into lofts, 8 lofts upstairs, 12 offices downstairs, and a coffee shop in the front in downtown. Me and Dan did that deal. And then I bought another multifamily and 8 single family homes. And my guys are just pounding them out. And guess what? The price point is not high for those single family homes. Why? Because what market got decimated? It's the high over $1 million, $2 million. They got decimated because people are not moving up anymore or moving down. They have a 3%, 4% interest rate. They're not moving up because Harold and Martha, they don't want to move up, because if they move down because they're older now, they're going to pay 7%. They don't want to pay 7%. They want to stay in the 3%.
Okay, let me tell you the challenges we face, my company, at Blackhawk, when we finance real estate projects, and see how it compares with you, and tell me, maybe you can illuminate me a bit. Smallest funding we do is 50 million. Largest, there's no cap. We require, however, for the sponsor, developer, operator, whatever you want to call him, to put in 10% skin in the game. Cash, not assets. Most of the developers are asset rich, but they are cash poor. They don't have any cash.
A lot.
This is, I'm sure you're facing the same thing.
Happens to me all the time.
I'm sure you're facing the same thing.
Quite honestly.
So this is the problem. We will finance 90% of the project, 75% in debt, 15% in equity, for a combo of 90%, and we require the developer, operator, whatever it is, to put in 10%. I'm actually working with a couple of people here under the scenario like this. Some of them have no problem in putting the cash. Others don't have a problem. So basically, when we finish a deal, we look for three things. And please, I want to share it also, Steve, with you. Number one, track record. A lot of them don't have the track record. And if they don't have the track record, meaning they never made money, meaning they cannot put cash as skin in the game. How do you make money? You either inherit the money or you make the money. And if you made the money, you have to have a track record to make the money. And number three, track record, skin in the game, and execution. Most of the people have not executed as developers. Like there's some guy who came to me the other day, he worked for Starwood as an advisor. He advised worth $20 billion worth of properties, but he was never the developer himself. And one day he decided to start his own gig and to be a developer. So he came in here, looked, I work as an advisor. He never made real money. I mean, he made a couple of $1 million, but not something major. And he wanted to be a developer. I told him, no, you don't have a track record as a developer. You never developed anything. You're an advisor. So this is the kind of guy. So either the problem is either the track record or the skin in the game or the execution, you know? This is the problem we're facing. A lot of the guys fall, you know, because they cannot meet that. They said you're very difficult. I'm not very difficult. The debt we provide is around 6%, 10-year debt, non-recourse, you know, so it's very reasonable debt. It's not like in the teens and loan sharking and all this bullshit. So this is how we do. So how would you deal? I mean, do you require 10% cash? We do. And also the debt has to be sensible enough because they have to service the debt. We do greenfield, we do development, we do all kinds of stuff. It doesn't have to be established properties. How would you deal with that?
Well,
I'd like to hear from each one of you.
Well, basically what you were saying, Ziad, is a lot of the lenders right now, especially construction lenders, are asking for those three things too. You're not going to develop a project when you have no experience. Hey, I'm looking to do a $75 million project,
of course.
but my two previous projects are $2 and $4 million.
Exactly.
Well,
so many.
Get out of town.
Exactly.
No one to do that.
And they shouldn't.
No,
they shouldn't. If you have the money, you shouldn't.
Yeah.
And 10%, actually, that's very aggressive to only have 10%. And a lot of lenders want to see even more than that, 20, 25%.
We will accept 10%.
Which is fantastic.
I think our terms are very competitive, and I don't understand why people will not go for this. A lot of them, either they don't have the money, they don't have the track record, they think the 10%. They think, they come to you, they think you're going to give them a term sheet without any due diligence, with 100% financing.
But and anyone that's thinking that should not be in the game right now.
I know.
I could answer.
So tell me, what am I missing?
You know,
What am I missing?
you're missing balls and guts. It takes a certain type of entrepreneur to actually commit to that 10%. There's a lot of people out there that...
You mean they're missing balls and guts because they don't have the money?
They don't have the money, or they have the will, they have the courage, but they don't have the backing. I'll give you an example.
Exactly.
When I was coming up, when I was in my industry in the real estate, and I was...
So hold on one second, sorry to interrupt. So when they can't really do it, you just write them off next?
You can't do business with them
Exactly.
because they're going to
done.
fail.
So we're doing this. Okay, I just want to know.
Yeah.
Okay.
I'll tell you. So I had a
There's
situation
a reason.
where I had a project, and this is around 2008, 2009. This is in Canada, though. We didn't get hit as much as the U.S. And I was involved in a big project, 100 units. And the private lender partner was financing me and said, Pietro, that's it. I'm done. There's no more money. And I was talking to a partner of mine at the time. He was an electrical contractor. And I told him, Dave, you have to come up with your end of the share of the money to come in, because he's not going to lend us anymore. Yeah, I know this oil guy and that oil guy and this. And it was always positive. But when it came to crunch and I said, it's a capital call, I need $1 million tomorrow, he couldn't do it. He couldn't do it. He writes me a check of $10,000. I look at it and I say, what?
Can't pay my guys.
So he went to the lender partner who said, Pietro, no more money. And he tells him, why don't you lend me money? You're lending Pietro money. Lend me some money. He goes, yeah, but Pietro has the backing. He has a lot to lose. He got 20 million of property there. He has 10 million of property there. Like, what do you have? You have nothing.
Yeah. Okay. Thank you, Pietro. Peter.
Yeah, so this is
The answer to this, Ziad, is the same as the answer to your question to Pietro when you asked him how to navigate a market where you bought at a high price 5 years ago and now values have reset. How do you deal with that? And so the answer to that, I think, for me, was you need money or access to capital. You need capital or access to capital. And for you now, with this question, you need capital or access to capital. For me, 10%, Ziad, I'm thrilled to put down. I'm always the largest investor in my deal, in all of my deals, one of them at least, if not the largest. So 10% for me is the minimum. I'm happy to do 15, 20, 25%. I want skin in the game. I don't want to leave so much upside for the other people in the capital stack. So I want to have capital or access to capital. If I can't afford to buy a building myself or to fund the equity of an acquisition myself, I'll bring in partners and investors. When I do that, Ziad, I am the largest investor. And so if I don't have a 10 million liquid and I need 10 million to participate in a deal with you, I'll put in maybe 4 or 5. I'll have Pietro put in 2.5. I'll have Josh put in 1.5, and Pauli put in 1.5.
This works. This works because the skin of the game does not have to come from one source. It can be a
But the key
family,
metric, the key piece in this whole discussion, I'm finding a theme as we talk, is having capital or access to capital. You don't have to necessarily have all of it yourself, but you need to have access. You have to have people that trust you and will be in business with you.
Thank you, Peter. Pauli, last but not least, then we will leave
also, I think I'm going to make something really clear too, because you guys start at 50 million and then go up there. And the problem is the internet and social media and all these gurus, just do something. You've never done a 300, unit apartment building. Go, just jump in that. Why would you do a single family? Well, there's a reason. You don't have this craft yet. You don't know the skills. You have to have the skills to get to the next level, And also, to answer your question, is you can get partners too. Everybody wants to make the big pie, right? What did I say when I first started talking? I worked with my uncle for free. Why? Because I didn't know anything. I needed to understand why my uncle does what he does. So if you can't do a deal like that, you don't write the guy off. He might not be able to do the deal right now, but you have to go back into the woods, into the streets, and work your way up there.
I appreciate this. It confirms all what I've been saying. Yeah. We think the same. I just want to confirm it, and I appreciate your feedback.
Appreciate
you. Okay,
you.
I'd like to leave now, since we still have half an hour. I think I talked enough. To leave it to the audience. Any questions you guys have to one or more of the panelists, please raise your hand, and we'll do that. Okay, go ahead.
So here's my question for the panel. Maybe a little easier when we speak to Pauli, who flips for a living. But I think the point of my question is that because you flip regularly, that's your business model. But for some of the other gentlemen at the table, they may not flip regularly. And so getting in and finding the right deal and all that is great, and stabilizing cash flow. I guess my question is, how do you know when to get out? Do you get out? Do you ever get out, or do you just pay things off forever? That's really my question.
That's a good question, Gary.
Thanks, Gary.
I love you.
And it's an important question, because a lot of investors who own real estate kind of either want to keep it because they say, it took me so much hard work to position it, to stabilize it. Now what do I do? How long do I hold it? And my theory for that question is, if you're going to be in real estate, keep it until you have a better building or a bigger building, and you're gonna upsize, basically. Because if you cash out, you just killed the golden goose, right? So who lays the golden eggs? And if you don't have that, your money is depreciating. Look what's happening out there. I told you the perception of value. Yesterday's price is no longer good. We injure ourselves, because as we move forward, we're paying more now. So that real estate, it's hard. If it's a great place where there's a development potential, that's another way you can look at it and say, you know what, I'll keep it till I find a partner to help me develop it. Or if you see another property that's bigger and better, then you sell it and you move on to the bigger one. But look, if you want to stay in real estate, that's what I would do.
Thank you, Pietro. Anybody else? Please go ahead, Susan.
Hi, Pietro, I have a question for you. You were talking about perception of value earlier.
Right.
All costs are going up. Everything's escalating. The property values are changing. Is it your opinion that in the mindset of the investors, that they're adjusting for the ROI that they're expecting in that changing market? Is their perception also changing for that ROI?
It's a great question, and it's a huge problem, right, for the investor who has property and has maintained it for a while. You have to buy right at the end of the day. You have to see the potential, right? You have to, when you're going to reposition the property, you're going to have to see the value where, you know what, my revenues are going to increase because I'm going to do this. If there is none of that, it's not a great buy. Why buy it, right? But you have to adjust. So you bought it, let's say, I'll give you a small example. You bought a duplex for $1 million 3 years ago, but today those duplexes are going for $1.4 million. And you're saying, shit, like I'm not going to make any money. But wait a minute, look at the rent values. Look how much they went. Are you able, and this is another feature which can appreciate the property so much, can you build another extension, make another apartment to that? Or if it's a multi-unit, can you add another 10 units? If it's a commercial property, can you add a Starbucks? You have to look at these, and these are hidden. A lot of people don't want to do that work, but yeah, there's so much. You gotta do homework. You can't look at it at face value. That's why I said you have to look the price of square footage of the land, the cost of reconstruct. If you had to build that same property, what is the cost of construction today? And this is how you gotta look at it in different angles, a 360-degree view.
There you go. Go ahead, Peter. You have an answer?
Investors absolutely are adjusting to the new reality. As I said before, being the equity in the capital stack doesn't mean today what it meant a few years ago and what it's meant for the past 15 years. That's where we wanted to be. We wanted to be the equity in the capital stack. Now, I don't want to be the equity unless I'm buying it at such a basis that it's rewarding me, or there's so much value to add that it will reward me there. Otherwise, being the equity is going to be the third or fourth seat behind the various levels of debt. And depending on your market, you've got regulatory and legislative issues that are squeezing. Everything's squeezing. Cost of construction, cost of labor. The legislative environment, I think, is the single biggest risk facing real estate investment today because of the pressure of these idiot lawmakers in all these states to come up with responses to housing, affordable housing, zoning, rents, prices. Like they're trying to legislate their way to office rather than just build more, right? Supply and demand, just build more supply. If you want cheaper housing prices, build more housing. That's the only answer, period. Investors have to get on the boat. I think they have been. I mean, as an investor myself, I've adjusted my expectations.
Thank you, Peter. Yes, Barry.
So you guys are talking about the residential. I went from residential to commercial years ago, but it's a side thing. I have an IT business. My question is, what do you guys think of commercial? I mean, New York's not going away. And what do you think commercial is now? What are your thoughts? And what do you see in the next 5 years?
Commercial what? Offices?
Real estate. Yeah, office.
I guess that's
I own offices,
I guess.
and they're doing very well, but I didn't buy them in downtown. I didn't buy it in a big city downtown where nobody wants to be. You have to buy it in outside of downtown, like even in a suburb. Believe it or not, there's office space in suburbs. Hendersonville, Goodlettsville, Gallatin. We own stuff, like that. So it's okay.
Even
and
your
now
office
you're
space,
going to
Barry.
get a better
Your
deal.
office space.
You're going to get a better deal for office because of what? The media telling you, don't buy it, don't buy it.
Yeah,
in
but you get
2008,
shittier
the
debt.
world's going to
But you
end.
get shittier debt.
We make things happen if you can hang on and you manage it better because everybody is weak in those areas. Construction, management, they don't know how to treat people. They're usually lazy. And every apartment building that I've ever had to restabilize, I had to get rid of the manager. First thing is the manager sucks. They don't answer their phone. They rob you. You have to manage the managers, right? So understand, don't be afraid of what you hear. You have to do the due diligence and buy it right, like we all said. Buying it right is where you make your money. Holding it for a long time, you know, everybody's a genius if you buy a house here and you sell it 10 years later. Everybody's a genius. Congratulations, you're going to make money. But I'm going to tell you right now, the genius is the guy who could find the right deal by grinding, putting in offers, building relationships, turning over every stone, finding the right deal, and then going and restabilizing it, rolling up the sleeves and doing what nobody else wants to do because they want to buy A, B properties and sit at home or on the beach. What the lies they tell you, you're going to sit on home. I promise you, you want to be an investor, you're not going to be sitting at home. And if you are stabilized, like all of us, we have money. I don't have to work. I promise you. I have a 10 for a reason. I don't have to work. But I want to work because I want to get more money so I could do better things with the money.
I love your question, Pauli.
So in the commercial property, the banks love more the residential aspect of it. The commercial, you need more cash to buy and stuff. As long as you're able to carry it while you're repositioning it, I'm all for it. I think today is the best time for commercial, even retail, to give lowball offers. Interest is not going anywhere now where it is. And if you can hit some crazy offers on property that you like and that you're seeing, go for it and do it. And don't be shy about it. But be careful, be able to maintain it and hold it for a period of time. If you're either buying it privately or through the bank, be able to maintain that, the payments, right? So that you don't lose it all, right?
I think you shortchanged him. To negotiate too. That's a great one.
Pietro just shortchanged you, and Pauli too. These two didn't give you the right answer that they could have. So you can buy commercial property cheap right now. We all know that. Multifamily you have to pay up for, but you get typically you can get non-recourse financing up to 70% 72, 70% LTV. Okay. With commercial, you can buy it cheaper, price per pound. You're not going to get non-recourse debt. What's your tenant mix? Do you have shitty local and regional a shoe repair guy? And they're not. There's no credit rating there. If you have a Subway and you have Dick's Sporting Goods and you have right, so that now you've got credit ratings, so you can get better financing, but you're not going to get non-recourse. You're going to have some level of recourse. So the shortchanging, I feel, in the discussion so far has been not speaking about that, because just to talk about basis being the answer to, buying commercial. I mean, yeah, sure, basis. Let's just agree now, basis is the answer for buying anything, whether you're buying Nike Air Jordans or you're buying commercial real estate. But I want to see you buy commercial real estate not only at a good basis, but with credit rateable tenants that you can get some decent financing on. Now we're talking about a deal, because it doesn't do you any good to buy a shitty strip center.
You got to look at the
wait a
leases
minute.
that are in place.
If you had Peter,
you got to look at the leases in place too.
Right.
You have to go to those
but
people.
you're not going to get the good deals though if you have those tenants in place, because
That's what I'm
the
trying to
people
say.
are going to
You
keep
got to
them.
go to the
So you
leases.
need to
This is
put
I'm going to
those
debunk
types of
the
tenants.
debunker right now. I'm going to debunk the debunker, because I'm going to go to those leases and I'm going to talk to them. Hey, you guys want to re-sign up for 10 years? Because if I get you a big lease and I walk that into the bank, say, here's what this guy's willing to do on paper. He's writing on paper. They'll give me the money to do that deal.
And if you
but most people are scared to talk to the people. You got to talk to people to get the deals. You got to create the deals. I started creating deals in single family, and I added on. I did additions. I took a 2-1, made it a 3-2. You have to be able to do the work. Go talk to the people. You plan on staying here. What can I do to help you grow so you're in my building for 10, 20 years? Exactly.
And if
I'm
you
not
buy
looking
right,
for
you
the.
can lower
I'm
the
not
rental
looking for
price,
someone
right?
who's
So
there
you can
all the
bring-
time. If you're looking for an easy deal, you'll never find it.
I had a question. How do you handle governments that instill these laws that inhibit, let's say, regular business? I need to increase my rents. I need to get this done. What do you do?
That's a long process, and that's everywhere. And I think, right, and you know, as long as there's steady growth, I don't think you can change that, but unless you lobby it. But I think it's a steady growth, and you gotta maybe go to areas where there aren't that many regulations, and keep maintaining it, because the places that have regulations, the properties are worth probably more. Because there's more people, city like Manhattan, stuff like that, bigger cities, and then maybe you got to go out and have a balance. I guess that's my question.
If you're heavily invested in one single market, you have to spend money on lobby and support your local politicians and pitch.
Drop an envelope.
Yeah, I mean, you have to get involved. If you have like a property in a market, you're gonna, you know, you're small potatoes and
You drop something.
Yeah.
Is that yours?
Yeah. Pauli.
Baby?
That's the Pauli version.
Danny?
Yeah.
Since 2001, I have a market in New Jersey. Since 2001, I've spent $500,000 on supporting candidates and getting involved in politics. It's the worst. It's the last thing I ever wanted to do. I don't want to be in, like, you know, so I'm running. I don't want to be in this municipality anymore. But I'm overweighted there. I'm the biggest fish. It's a small pond. I'm the biggest fish. So
I cry for you, 2,000 units plus.
Yeah.
I cry for you.
Thank you. So thank you. Go ahead.
I had kind of an international flair question. With Evergrande's collapse in China, do you see regulation being tightened here in the U.S.? Also, you know, what does foreign investment do for your businesses, and should we be looking overseas for any real estate opportunities? That one.
I don't think it's going to affect us what happened in China. First of all, they built so fast, and if you just look at the pictures from the news media, how they built them, they kind of already fell apart. I think, you know, North America is highly regulated, especially in the construction industry. An exception like Mexico, look what happened in Acapulco. Most of the high rises, all their windows popped out and everything. I wonder if they were even surveillanced when they were actually building. So, like, North America is more tighter. It has more regulation. What was the second question?
Foreign investment here, how is that affecting prices?
And would you ever do foreign? Like, put your money in the foreign market?
Foreign, there was a study that came out. They said only 10% of the foreign investors are affecting the market. 10% is not big, but look at BlackRock. Look at all these big funds that are taking the hardworking people's money and then buying houses, 40,000 and 50,000 houses from these people, and they want to buy a house, and now they have raise the price, but yet they're investing on them. So it's like they're killing themselves, right?
The market.
So I think this is what's happening, is that there's too much competition, and the government allowed this to happen, which it shouldn't have happened. And I think if we're talking about housing, and I think that's what you're talking about, I think that is a big problem. And they're already talking about changing the rule on that, but I don't think it's going to happen. They have too much money and too much power, and they have them in their pockets, right? The officials are.
Would you invest in a foreign?
I do invest. I invest in the UK. I invest all the way to New Zealand. So I invest. I partner with local market partners where I fund them and I fund their deals, and I give them support and strategy and guidance when they do development. That's what I do.
Thank you. Next.
And so my question is pretty much, you guys are talking about the distressed properties that are going to be coming with, the way the economy is shifting. In your professional opinion, what do you think are good, green flags or key points to keep an eye out for to see what is a good buy when it comes to distressed property and opportunity, and what areas, whether it's blue or red or certain states, you think always tend to have the best trends with these type of distressed opportunities based on your experience in 2008 and your real estate history?
Every lender has a distressed asset desk, and they have what's called a tape, which is really just, that's referring to like a list, but they do it in Excel. You have to form relationships with lenders in your target areas and ask them for the distress tape. They'll email it to you. That's where you need to look. By the time it gets to a broker and then the broker calls you, it's done. It's done. It's already been picked over and rejected a million times. There's something wrong with it, most likely. So I would develop, the biggest green flag, to use your word, that I would look for is call your lender's asset desk, distressed asset desk, and form a relationship with those people and get the tape. And then you can start picking through the lists on the tape. Pick your market, pick the banks in that market, and that's who you're going to be communicating with. There's 20 or 30 lenders in every county, in every region. You should be interfacing with all of them.
That's all. Next, Mr. Sir.
But I'm wondering if you're seeing any shifts in the market or trends in interest in alternative value adds, meaning independent energy or off-grid energy, and like independent food chains, providing those kinds of value adds to subdivision developments, multifamily places.
Well, one of the big things now that is huge for a lot of our developers is PACE funding, which is bringing in the green initiative to developments, single families, and even multifamily projects, housing, and it gives you that extra. In essence, it's almost like a mezzanine piece where a lot of lenders will say, we'll give you 75% loan to cost, 80% loan to cost. Well, that extra PACE funding can add another 15% on without giving up any equity in the project. And as far as it's very minimal as far as what you'd have to do for the green space. It's not going to add a ton to your budget, yet it allows you to bring in less capital and still maintain the same ownership without affecting your bottom line very much at all.
That's exactly what we do.
Matt Swerdlow, what's your question?
I think I was pleasantly surprised to hear about the sentiment about the single-family rental asset class before. And I think the millennial generation started very much behind the 8 ball compared to the other generations in this country. Is there any meaningful legislation that you would support to remove the institutionalization of the single family as an asset class amongst investors?
You're using the phrase institutional. Do you mean the big corporate like BlackRock and shit? Yeah. So
the guys.
Right. So they make up right, but they currently make up what? 7% of the ownership of single-family homes in the country?
That's the usual counter, but they're picking their spots in good demographics, in good cities, in good suburbs. It's right where I want to live. So if they control the supply where all the high-income earning millennials want to live, we'll never get a chance to own a house or appreciate and earn equity.
Make more money so you can compete with them and buy a more expensive house where they're not buying. That's the first thing I'll tell you. The second thing is, what else do we regulate for the big private equity guys and investment funds? Do we regulate their purchase of franchises? They're buying up HVAC and plumbing franchises, Roto-Rooter. They're buying up all that shit everywhere. They're buying up all the finance companies so that when the homeowner has to get a quote for $1,600 to fix a leaky toilet, they say, well, it's okay, we can finance it for you, because they also bought all the finance companies. Are we regulating and limiting their purchases of that too? It's okay if you say yes, but I just want to know what we're talking about here, because I want to be in a free market environment where I can compete. And if you're bigger and badder and better than me, and you beat me, then I suck and I need to level up. But I want to compete freely.
Look, let's be realistic. Regulation my ass, government my ass. They own the government. They are the government. They call the rules. They have the money. They call the shots. The government gets kickbacks on everything. The government is the most corrupted ever. Not just this government, every government. That's what it is. This is a fantasy. Talking from a millennial. Oh, I'd like to do that. Maybe the government can regulate. The government is owned lock, stock, and barrel by the BlackRock, the Vanguard, etc. That's it. That's reality.
That's true.
All the rest is fantasy.
This young man right here, he knows it too, because he's been around. He's been around. He's seen the changes. He knows.
I mean, this is reality.
Hard to
Let's face
compete.
reality. This is why I'm saying with my initial speech when I started talking about this, the government is your enemy. They want you uneducated, stupid, believing, put your damn mask, sit in front of the TV, shut the fuck up, don't disobey, don't do anything. That's what they want to run you, lock, stock, and barrel. Ask them for regulation. They're all both lock, stock, and barrel. Somebody who makes $175,000 now is worth $400 million? How? How can you jump from this to that?
Side deals.
Of course.
Side deals. Brown bags.
Come on, all the war in Ukraine is all side bags. The war in Israel and Middle East is all side back. They want more, the more they want, the more they make money. The more they get kickbacks. That's how they make money. They go to government not to change anything, to help you with your law, where you're going to live. They don't give a rat's ass where you live. They do it to enrich themselves and speak in the name of democracy and freedom and all this fucking bullshit. That's reality.
That's why we're here. That's why Ziad and people like us and
Exactly.
all of us, we're here to fight back. Because honestly, if we fall asleep, they win. Trust me.
And
it's happening.
It's all about, seriously, this is exactly, thank you, Pauli.
Yeah.
This is exactly why we're here. It's an awakening, especially the younger generation, the millennial. They're in la la land. And they're taken by all this liberal bullshit, taught
Social
at
media,
Harvard
it's all
and
that.
Yale and all these elite colleges.
This
elite
young man
my
in the
ass.
front, he understands this.
Matt, I don't support any government regulation on that, but I know it's going to happen. I'm not in support of it at all. I want a free market.
My philosophy, I do exactly the opposite of what the government says in every single respect.
He does.
I do.
I know.
Honestly, and it works every time. They tell me, Ziad, you're exactly.
Why?
Ziad, you're a genius. There's nothing genius. I do the opposite. Very simple. So let's wake up. Let's wake up to reality. The government is here to help me. The government looks for my interest. The government wants to be stupid, asshole, poor, dependent, listening to them because they are gods. And they are all narcissists, by the way. Okay, I think we've spent enough time on this. Next. Yes?
Quick question. What's your hold time usually on deals, and do you have a preferred return and a waterfall structure?
What asset class? A single family or multi or?
Multifamily?
My whole time, I'm long term. Personally,
Forever.
I'm long term. I never like to sell, and haven't recently. In my younger years of my career, I had to sell in order to capture the equity to then keep going. But now I don't, so I don't sell. So I align myself with long-term capital partners when I need to have a capital partner. I want them to be long-term and aligned with me. I don't want them to have a fund that sunsets in 5 years or whatever. That's not going to be a good partnership for me. So I'm long-term, and my deals, my value-add deals, I offer investors anywhere from an 8 to a 10 preferred return, and then a waterfall of anywhere from 75-25 to 50-50, depending on how heavy a lift it is. If the value add is really huge, I'll ask for a 50-50. If it's sort of like a regular old value add, 75-25 is pretty fair, maybe 70-30. But every deal is different. You have to really assess it based on how heavy a lift it is.
Okay, it's 8:35. 1 minute.
We go to
closing.
12. Come on, Ziad.
What?
I'm getting hot. I'm getting going now. I'm just starting. It takes me a little while.
1 minute closure for each one of you.
My last word would be this. If you're in the game, keep working on your craft. Keep getting better. Because the market and real estate's always turning. It's always turning and moving. And you have to learn how to pivot, right? And so you have to be around people that You'll have to be around people that have been in the market for a long time. You know, I've been doing this a long time. I also have mentors. One of my mentors is 94 years old. A couple of you guys know him. And he taught me how to look at deals differently. So I think you need to get around people. And obviously you guys are here, so you're the smart
You need to
ones.
find a mentor. You need to find a mentor.
You need that mentor that's been around, like this young man right here. in the front row, we could all learn from him because he understands what happened in the history, and history repeats itself. And I love risk, but when you have knowledge with risk, it becomes less of a risk. And the worst thing you could do if you're just getting into it is be afraid of it because you don't know enough yet. And I think a lot of people make the biggest mistake is they don't take action. And if you don't take action, then we all get crushed like bugs, like Ziad said earlier. It's up to us to grow. And the only way you grow is by taking action and being around people that know more. And you'd be surprised how many successful people want to give. They don't want to get paid to give. They just want to give because we all have that mentality Ziad has, is we don't want to get crushed by these scumbags. We want you guys to be crushing them.
Thank you, Pauli. So I get asked a lot, Peter, what are your major concerns? The world's changing, the markets are changing, real estate investing is changing. What are the things that concern you the most? And the high interest rates don't concern me. It's very simply a few things. Number one, an unprecedented act of Mother Nature. So I have a lot of properties in coastal New Jersey. I'm talking about a Hurricane Sandy times 100, right? That thing happens, it wipes out not only the coast, but miles and miles inland, we're all screwed. So an unprecedented act of Mother Nature. The second thing is an unprecedented act of terrorism. God forbid a dirty bomb or something goes off in New York City, it takes out a 150-mile radius. I mean, that's a big problem, we can all agree. So that would concern me investing in real estate. And then the last thing, and this is a new thing because I really only had the first two for years, but now I've got a third. And the third is new regulations and legislative environment is really going to come at such a faster pace. If we watch the political landscape, the way that we see these candidates get votes is by implementing these regulations. And the hot topics right now are housing and affordability, lack of affordability of housing. And everywhere you look, everyone's running on a platform where they say they're going to have zoning controls and change the zoning and restrict the zoning and rent controls and my friend Matt wants to restrict BlackRock from buying all the single family. I mean, this is it's coming. That's really going to impact us more than anything has ever before is the new legislative environment. So I wish you all good luck in navigating that.
Thank you, Peter. Thank you.
Very good points. For the ones who haven't started yet, I suggest that you get involved and you start a little bit. You don't have to go crazy. It could be a condo, but buy it right. It could be on plans. It's a development that's coming up. If you can determine the location of the development, if it's going to be near a transit area, you'll get an appreciation, but you're going to get in the game, and that's so important because you're going to start to realize, and that's that perception that you want to say, you know what, I like this, and this is how I'm going to do it. For the ones who already have that real estate, 70% of my portfolio is real estate. The rest is in equities and businesses. But the great thing about real estate is like it's the goose that lays the golden eggs. You don't want to get rid of it, right? Especially for Gary, for the commercial properties. You see, with the interest rates that went up, I had several properties that came up for financing. And loan to value is what the bank is always talking about. So I had to move into a conventional bank. I have a property that's worth close to $12 million, but they won't lend you more than $5 million. Okay, great, that's the bank. But now you can take that evaluation and go to, or the appraisal, you can go to a private lender and you can ask them, this is my property, how much were you willing to give me for this property? And you don't borrow it, but the minute you have an opportunity, you execute. You go to that lender and you say, here's the property, put a second lien on it and lend me that money. You don't need to dilute your equity or give a partnership or anything like that. It's a tool. Use real estate as a tool. Try to expand it, and leverage is such a great tool to do that.
Cash out refines. Talk a little about that. The cash out refinance too. A little.
Right. Hold on a second, Pauli.
Pauli's coaching you right now.
Partnerships. If you don't have,
He's uncoachable. This
if,
guy.
if you don't, no, it's because I have that thought trend. So if you're scared, get a partner. Like Pauli said, I'll work for free. I'll do it on my spare time. Help them out. Try to understand it. You need to get your feet wet. If you're not going to do it, you see, when I started my career, I started construction because I was good with my hands. I'm still a visual engineer. I was so great about it, and then I evolved and I got better and better at it, and that's where I went into real estate and then into equities and private businesses and stuff like that. So there you go, man. Like, you got to start. If you don't start, nothing's going to happen. And for you guys for being here, I commend you.
Yeah, me too.
Thank you, everyone, for being here. Gentlemen, thank you. It was a pleasure. One of the main things I want everyone to take away from this, in which I preach to all my clients, and I know we've talked about it, and it ties into what all three of these gentlemen were saying, is a plan. You have to have a solid business plan, and you have to understand what you're doing, and you have to, when you begin, even if your experience and you have money, or if you're just starting and you only have this amount, you have to know, all right, this is the amount of money we feel comfortable and that we have to allocate. These are the asset classes we want to look at. This is the type of property we want to be distressed, or we want to buy turnkey. And then you implement that plan. I see so many clients go either belly up or lose properties just because they never really had a plan. They just said, hey, I've got a lot of money. I'm going to buy this. I can fix it. I don't worry. I don't have contractors. I'll find a contractor. And then costs go up. And then something like happens now. Rates go up. The market shifts. These people go under. They lose. And if your plan's not solid and it's not being implemented, then you're going to get screwed. You are. And also, you have to be able to adjust that plan to the market. Because if you have the same plan and you say, hey, listen, this is what I want to start with, this is what I'm going to do my whole career, I'm not going to make any adjustments, once again, it's not going to work. You have to be adaptable, and you have to have that solid plan, and also the right people in place. Like you guys were mentioning, sometimes, hey, listen, I don't have enough cash. I'm going to reach out to some investors. I'm going to reach out to a partner, give up a little equity because I know this is a good deal, and then we can take this deal and propel us to the next deal, and then to the next deal moving forward. That's the main thing that I want to see everyone do, is just a solid plan.
Thank you so much, Jim.